What if I told you 2026 could be the year stocks quietly bleed investors dry, not in a crash, but in slow, painful underperformance? And what if I also told you the smartest money on earth has already prepared for it? Because while retail investors are buying the dip, one man has been raising cash like never before. Today we'll uncover why stocks may disappoint in 2026, why gold might not be the best hedge this time, and why silver, yes, silver, just got a silent green signal from China. Stay till the end because this isn't about prediction, it's about positioning. Let's start with the obvious question. Would you ignore a fire alarm just because the building hasn't caught fire yet? Since the bull market began in 2023, Berkshire Hathaway has raised cash aggressively. Its cash pile jumped from around $100 billion to nearly $400 billion. That money didn't come from nowhere. It came from selling stocks, including Apple, once valued near $200 billion in the portfolio, now trimmed to roughly $60 billion. Buffett even reduced his long held stake in Bank of America. And here's the most important part, that cash is sitting in short term US Treasuries, yielding about 3.6% annually. Think about that. If the greatest long term investor alive is happy earning a return that barely beats inflation, what does that tell you about future stock market returns? Because historically, when Buffett raises cash aggressively, the next few years in stocks are usually underwhelming. So if stocks struggle, the real question becomes, where does smart money go next? Gold, Bitcoin, or something most people aren't even watching? In October 2025, China quietly published an announcement. No speeches, no headlines, just paperwork. Announcement number 68. It introduced export licensing rules for strategic materials, including silver, for 2026 and 2027. Most people hear the word license and think boring regulation. Rich people hear license and think supply gets controlled and prices get reshaped. Because when a government decides who can export, it's no longer free trade, it's power. Licenses mean domestic supply comes first. Strategic industries are protected, and shortages are exported, not solved. And here's the dangerous part, silver didn't wait for permission. In 2025 alone, silver moved from around $32 an ounce to nearly $80. That's not normal behavior for an industrial metal. That's a market screaming. Physical demand is real and supply is tight. This isn't theory. The Silver Institute reports industrial demand hit a record 680.5 million ounces. Silver is everywhere, electronics, electronic vehicles, solar panels, power grids. Because silver has the highest electrical conductivity of any metal. You can't replace it easily, and you can't print more of it. Here's the real lesson. When governments tighten control on strategic resources, prices rarely come down. They move up violently and without warning. So, if your financial plan depends on stable prices, smooth supply chains, no geopolitical friction, you're building on a fairy tale because in the real world, licenses decide prices, supply choke points decide winners, and preparation decides who gets rich and who gets squeezed. Thanks for watching.